What is going on, guys? It is James Lee here from Celestin Capital. Welcome to today's video. I hope you all had a great week. Today, we're going to take a look at this GCAD trade that I took with multiple entries. And I'm hoping that this video gives you guys some insight into how I approach the market and how I decide to enter the market. Now, as you may or may not know, I am a smart money trader. And, you hear a lot of people talk about smart money as if it's the golden strategy that everyone should use. That's not the case. I believe that every strategy works. Now, the thing is that every strategy works as long as you've back tested it enough and you've created a system for yourself, so that you've created a system and rules for yourself that you can follow. Now, the reason I trade smart money is because, just like with anything, I like to understand the theory behind things. I like to understand the reason certain things happen. Now, when it comes to the financial market, when it comes to Forex or any other market I decide to trade in the future, I like to understand why the market moves the way it moves, why it does the certain things that it does. And that's the reason I'm getting into smart money. It teaches us the behind the scenes of what goes on in the markets, how banks like to manipulate the market. And, it's just better for me. It's a better way for me to understand and just to cultivate my own system for myself and to be able to trade these financial markets. Now, again, as I've said in previous video, I'm by no means a financial advisor. Anything I do or say in this video is based solely on my opinion and my bias on the financial market. With that being said, let's hop into this video. So as you can see, I took multiple entries on this GCAD trade. Now I'm going to break down, or I'm going to go step by step into the reason I took this trade. Let's go ahead and start from back here. Let's head back to over here. Let me go ahead and delete this part right over here. So if we zoom out, we see that this is the structure of the market, right? We can see something like this. And we can expect the market to, mitigate some orders before continuing to the downside. So this is what I see happening right now. But if we zoom in more, we see that this is the microstructure. This is the fractal nature of what's going on in the market. If you don't understand what fractal is, it basically means that whatever happens on a higher time frame happens on a lower time frame. So this is what I see happening. And then this big impulse to the upside. Now, this is one of my confirmations for entering a trade. I like to see a liquidity grab, which is what happened over here, and a break of structure to the upside. We can see that this break happened once the market got above this high right here. Once the market got above this high right here. What is going on? This market got above this high over here. We can see a break of structure to the upside. Now, the market came back, retraced into this break of structure, and if this was enough confirmation for you, you could possibly use the 50% fib, which would have been a nice way to hop into this market. As you can see, it tapped nicely into this 50% fib, but that's not enough confirmation for me. I like to see one more break. I like to see one more break and retest, which is what happened. We can see that the market broke again, and I was expecting for the market to retrace even down here and give me the same confirmation that it did with this break and retest to a certain area. But as you can see, the market did not do that. It just continued to push up, continued to push up. It had a small pullback, but not enough for me to enter the market. And I was potentially looking for the market to, again, give me another retest off of this last down move before the up move, potentially. Or if you want to go ballsy, you could actually target these equal lows right here before you target the liquidity sweep of these equal lows before heading to the upside. And this would have been my second entry. This would have been my entry into the market. Since I didn't get the first one down here, I would have potentially taken this one right off the sweep of these equal lows. Potentially. But That was not the case. The market did not come down to give me that entry. But what I do see is the market potentially heading back up. We see breaker structure to the upsides, breaker structures to the upside. But then if we look at microstructure, we see that the market is starting to break down. Now, what I'm expecting is for the market to shoot up and potentially retrace off here before going up. I'm expecting for the market to shoot up, come mitigate some orders down here before shooting up, or mitigate some orders down here before continuing to the upside. Let's take a look at this. So instead of me waiting for the market to come down here, which could take several days or several weeks, or wait for the market to come down here before continuing to the upside, what I want to do is catch the sell down to these zones and catch the buy up to take out some liquidity up here. So for me, I don't like to necessarily, because I trade on lower time frames, I don't like to wait for the market to come to a certain zone, because again, the market is fractal. There are zones within zones. There are structure within structure, and that's exactly what I'm seeing here. We see that the market is breaking structure to the downside. See something like this, a break a structure of this low right here. So this is how I'm starting to see the market. I'm starting to see a pullback in the market. And then this break was a nice confirmation for me to start looking for sells. And I targeted this unmitigated demand or supply zone right here. So as we drop down lower time frames, we see breaks of structures starting to happen. And we can see these equal lows up here. Equal highs, excuse me, that the market has decided to take out. As you can see, and if we drop to a lower time frame, this is where I started to look for my entry, because now I started to see a distribution schematic happening, because we see we've got preliminary supply, buying climax, and then supply, buying climax, UT, and then break a structure of this low right here. So we can see the market starting to shift structure within our zone. Now, we don't want to see shift of structure just anywhere. We want to see shift of structures within a certain area, a certain POI, point of interest, or within a certain zone. This is the supply zone I decided to target and look for shift of structures in. And that's exactly what I got. I started to get a shift of structure in. Now, my first entry was off of this supply zone right here that the market broke to the downside. As you can see, structure and then a break of structure right here. So now I'm expecting the market to come back up, mitigate, and continue down. And this was where I got my first entry in, right off of here. And I put my my stop loss up here just to be safe. So again, I'm looking for a tap in to continue down. And I'm going to show you my second entry once we get to that point. So as you can see, the market has tapped me in. I'm going to keep that there so I can show you my second entry. Now my second entry, here's what happened. We see that the market came, tapped me in, and is potentially heading to the downside. Now what I'm seeing is something like this. This is what I'm seeing. I see an imbalance in the market right here. And not only do I see an imbalance, but I also see these equal highs right over here. Just as we had, let's see, just as we had equal highs over here that the market took out, or was it equal highs over here that the market took out? I'm looking for the market to do the same thing, take out those equal highs on that lower time frame. Again, the market is fractal. Whatever happens on a higher time frame happens on lower time frame. Liquidity high, and same thing with here. I'm expecting the market to take out these equal highs at the same time, fill in this imbalance right here. So I decided to put another entry right above this equal high. So when it takes it out, it just automatically taps me in. And for this, I decided to reduce my risk on the first entry just because I don't want to risk any more than 1% a day. So if I'm going to take a second entry, I'm going to reduce this risk to at least 0.5%. 0.5%. I like to reduce my entry just so I can add another entry. Ideally, what you want to do is go break even before you take another entry. But if you're not able to go break even, because again, I'm using this high as my stop loss. If you're not able to go break even, then it's best that you reduce your risk on your first entry or on your previous entries before adding other entries. So let's see. The market taps us in at the same time liquidating these equal highs and filling in the imbalance before, as you can see, continuing to the downside. And my target over here was, again, because I was targeting this demand zone, or yes, this demand zone right here, or this demand zone down here, I use this right here as my target. This low right here, as you can see, this low right here was used as a target, which is seen as liquidity for the banks. So let's see, where is it? There we go. Wait, what's going on? Okay, here we go. So I'm targeting this right here, and you can see we have equal lows that I expect the market to clear. Liquidity low. So I targeted this for both of my entries. And you can see the market is starting to head down. And now, although this shows it's a 1 to 9 and this shows that it was a 1 to 8, this one right here was actually a 1 to about 4 point something before I partialed at this point. So this was actually, in fact, actually wrong one. This was a 1 to 4 before continuing on. So I secured 1.4R, 4.5R before the market continued. Or 1 to 5R. Let's go on a higher time frame and see what happened. There we go. So for this trade right here was actually taken on my FTMO account. And unfortunately, because it was a Friday and the market was getting ready to close, I could not hold this trade because, again, my target is this demand zone right here. I could not hold this trade. But I did hold this one on my live account. I couldn't hold this one because I don't have a swing account for FTMO. I have the regular account. But I did hold this one on my live account. So this is continuing to go down, and we're already at a 1 to 9 RR. So as you can see, this is how I entered the market. You know, a lot of it was patience. It didn't take as long as this video took. What is this? This video is about 13 minutes. It did not take 13 minutes to find this setup. It took me hours to find the setup. But the thing is, I was not sitting at my computer for those hours. You know, you could potentially set alerts for yourself. You can, you know, leave your computer or come back at a later time. But my advice is not to just sit at the computer and wait for a setup. Let the setups come to you. Don't force anything. You know, trade what you see and not what you think is going to happen. Because I could have easily taken trades anywhere else, and I could have lost those trades if I wasn't patient and if I didn't stick to the system that I've created for myself. Again, a lot of this is just sticking to the rules that you have for yourself, sticking to the system that you've cultivated for yourself over the period of backtesting and your experience in the markets. And so hopefully this gave you guys some insight into how I look at the market. And I'm for sure going to have some smart money videos coming out. More so a lot of basics and advanced videos coming out in the near future. So be sure to stay tuned for that. If you want to stay tuned for that, if you're excited for it, be sure to subscribe and turn your post for notifications on. And if you like this video, be sure to hit the like button so that you are notified when I drop my videos. Again, I hope this gave you guys some insight into how I approach the market and how I think and view the markets. And, you know, again, a lot of it was patience. Be sure you're patient. Be sure you're disciplined. Make sure you don't take trades based off emotion. Just trade, you know, based on the system that you've created for yourself, based on the things that you've learned when backtesting or studying the markets. Again, I hope you enjoyed this video. Hope you guys have a great weekend and a great trading week next week. Be sure you stay safe and see you in the next one. Peace.